The latest GDP figures out today shows the nation's economy grew by 0.6% last quarter, finishing up 5.9% over the year. Growth has come in below expectations, slowing down from the 0.9% growth in the previous quarter. Let's get some analysis on today's figures. I'm joined by Pradeep Philip, the head at Deloitte Access Economics. Pradeep, what's your read on these numbers out today?
Oh, look, these were broadly in line with kind of market consensus, Kieran. But what we can see here is that the Reserve Bank's work is actually working. You can see in these numbers and in the numbers since that the economy is starting to slow. And so it may well be time for the Reserve Bank to now pause, take stock over the next few months before they come back to thinking about what they do about interest rates. And what we see in these numbers are kind of three implications, right? For the economy, we see the economy slowing and we want to make sure that we don't get tipped into a recession. For business, even with a slowing economy, right, they've got to be ambidextrous. They've got to invest in their people and their talent because it's a tight labour market. Second, they've got to invest in technology and plant and equipment because that hasn't been strong enough. And third, they've got to invest in innovation because this is how we're going to lift productivity over the long run. And the third implication in the economy, Kieran, is for households. You know, households, you can see in these numbers, prices are eating away their purchasing power, interest rates are reducing their ability to spend, and wages aren't keeping up with inflation. And that means that the consumer-led recovery that we've had so far is starting to run out of steam.
Pradeep Philip, the RBA yesterday lifting rates by 0.25%, not as high as some economists had expected. Do you think they're already starting to pull back and potentially, we know there's not a meeting in January, but it seems from what you're saying, is their work done in terms of the rate rises?
Look, it may well be because what we're seeing, and don't forget these numbers are from 3 months ago, and we can see in these numbers the economy starting to slow. And we're seeing in the numbers that we've had over the last couple of months that we're seeing more signs of that slowing in the retail sector in particular, but more generally across the economy. And so the Reserve Bank has been focused on fighting inflation. And to fight inflation, it's got to slow the economy. But we know two things about this. One is that interest rates do pack a punch. And we're seeing that in the numbers starting to come through. And the second is that central banks have a tendency to overshoot, go a bit too far. And so this trade-off between inflation and the economy, the bank has sided on in attacking inflation. Now it's got to pause and think about the effect on the economy. So over the next couple of months, there should be a bit of a pause. They've got a break in January. They'll come back in February and they'll have more data to make decisions.
And do you believe that a soft landing is likely, possible, given the events internationally?
The challenge, Kieran, is how do we thread the needle? And the numbers are telling us that we're probably close to the peak of the inflation cycle, that interest rates are doing their job. So it is probably time to pause to try and engineer that soft landing. And what these numbers tell you, Kieran, is you can see in the rest of the world is slowing. You would rather be in Australia than in most other places. We've now got to engineer this soft landing for the sake of the economy, for business, and for consumers.
We've got some detail here. Andrew Clennell reporting this afternoon the breaking news on the proposal the federal government's put to the states, a domestic coal price cap of $125 a tonne, gas prices of $13 per gigajoule to be announced by the federal government, those caps. Extraordinary to see an intervention of that sort. Is it appropriate?
Look, Kieran, these are extraordinary times, right? And part of this is being driven by the war in Ukraine, and part of it is being driven because we haven't really tackled this question of the energy transition in a coordinated way for quite a while. So you have to kind of balance this issue of the market doing its work, and it's been a bit uncoordinated, and the price that business and consumers pay. And so the government has rightly put all things on the table, and they know they've got some inquiries going with the ACCC and the Productivity Commission. One of the things they have flagged for a while are price caps. Now, in economics, one of the instruments that we do have at our disposal are things like windfall taxes, and there's been a debate about that. So should the government be considering this? Absolutely, but they've got to go into this very carefully, because what we don't want is unintended consequences around investment. But at the same time, the government's got to take people with them, and you can see even in the GDP numbers that we've had today, that people are starting to hurt. Consumers, you can see that household savings are starting to fall quite a lot. So they have to balance both the business need, the investment need, as well as consumer need.
Pradeep, Philip from Deloitte Access Economics, great to get your insights as always. Thank you.